Assalamualaikum, my name is ILLIZZA binti AFFENDI and my other group members is IKHLAS binti SHOEID, FATINI ATHIRAH binti BARI, and the last one is IZZAH HUMAIRA binti RAMLI, and we are from group 3 of JBA 1195C. The reason for the company collapse was because of failure and instability of corporate governance. The business strategy was not well handled by them and it caused the collapse of Lehman Brothers. The sub-managers did not do their work properly and were aiming to make a profit. Lehman Brothers used their own money to expand their commercial real estate, private equity and leverage loans. As the subprime mortgage market downturn became the worst, Lehman was tactically led to realize a crisis that had a multiplying effect on commercial real estate and the banking system as a whole. Its top executives had not been distracted by the alert signs of subprime mortgage crisis, and Lehman has dramatically and broadly introduced its own internal risk boundaries and safeguards in advance of its current strategy. This policy is primarily to blame for Lehman's liquidity issue, as well as for the losses the group has suffered since June 2007. Lehman invested in a risky company by acquiring 5 lending firms mainly focused on subprime lending, and they had a high market capitalization of about 60 million in 2004. Unsurprisingly, they failed due to the unprecedented high of subprime loan defaults and eventually returned to hit them, despite the company's promises to the contrary. The firm was over because the value of its mortgage portfolio was no longer convincing. Lehman's collapse had to do with a drastic change in their business strategy that had taken place in the sector, other than the subprime market that began in 2006. Lehman's downfall may have been avoided if executive management were taken action to ensure effective risk management of their activities. The financial crisis in 2007 to 2008 will stop if the financial institution follow the appropriate risk control procedure in their derivative dealing. Lehman had spent much more on risky derivatives before the crash. The way Lehman was structured was risky and it affected their business of the company. The example of Lehman Brothers' failure can open the eyes of people that without a proper management plan and taking the right steps, it will ruin the whole company. Mortgage guarantees caused the 2008 financial crisis, which involved much of the high-risk subprime loans. These subprime loans were sold and raised to quasi-government agency. Lehman Brothers went bankrupt after trading risky financial instruments. The bank had been heavily involved in the mortgage market and owned the mortgage seller BNC Mortgage, and the bank also held 30 times more in real estate than its capital. It is because they borrowed much more money to fund their mortgage investment. Lehman Brothers had to face the risk due to lack of risk management without proper decision making. Unfortunately, Lehman held on to their mortgage and was unable to sell low-rated mortgage because the market had turned dramatically.
The risk-oriented culture of Lehman Brothers encouraged unethical conduct on financial gains, thereby creating optimal risk-taking and ignoring questionable actions. The problem came when they began to make mortgage loans where Lehman Brothers invested in the mortgage-backed securities because they thought that these investments were secured and assisted by the market prices of houses and does not make any further research and planning. However, in 2007, the house prices were declining and the amount of defaults on subprime mortgages rose, which eventually led the mortgage-backed securities became a failed property. The finance officers of Lehman Brothers chose to prevent full disclosure of their financial issues. The company's misconceptions about their investment options and their frequent infringements of the basic banking principles of short-term borrowing and long-term lending have converted the house crisis into a financial crisis. Lehman Brothers found themselves in an ethical failure that eventually led to their downfall by failing to disclose full information about the mortgage-backed securities, consequently misleading investors. Lehman Brothers deliberately sought to participate in legal practices that crossed the line of the business ethics simply to make more money, instead of following an enlightened self-interest that understands that a corporation's primary purpose is to make profits. In business, ethics plays a big role for financial firms to practice. Ethical conduct is thus preferred and should be encouraged. The downfall of Lehman Brothers was sudden, and as a result, everyone hurried to bail out. They could have sought a collaborative way to cope with the crisis with the different stakeholders in the company if Lehman Brothers had kept their financial position clear. The employees should have been honest and fair about reporting the required documentation on accounting activities. The Lehman Brothers may have been protected with an approach to moral freedom, such as promote freedom of expression by obtaining feedbacks from employees over the ethical violation of the company. Intentional decisions were made to steal and manipulate, and the consequences proved to be too dire to save the survival of the legendary investment bank. The ethical culture of Lehman Brothers endorsed high levels of financial leverage to boost returns, and this, combined with upside-down rewards, forced employees to report the solvency specifics of the business to be dishonest and untrue. The executive could not neglect the fact that the transactions carried out by the company were legitimate and ethical, but nothing was done to prevent ethical issues from occurring because of the lack of an ethical framework that promotes good citizenship and ethical behavior. This ignorance led to the current situation of the Lehman Brothers, where the company does not exist in the society anymore.
Poor management by Lehman Brothers is one of the reasons why they collapsed drastically. As it said, top managers have the desire to be always stay ahead from other competitors that use high-risk strategy to gain more profit and to look more relevant. So top manager thinks it will be a nice step to also use those high-risk strategies in subprime mortgage investment to Lehman Brothers because they thought the company was smart enough to handle any failure in future, which is not true. After that, Lehman chief risk officer stated that top management always didn't take it seriously about their risk management strategies because they think if anything happened, Lehman Brothers still have lots of assets that they can use to cover the damage. The firm bought 5 mortgage lenders that give assets to originate and underwriting subprime loans, where it managed to increase the profit. However, in March 2006, Lehman Brothers decided to buy commercial real estate and some risky loans in abundance that cost them a lot, and made the decision to only store them on its book instead of selling them right away. The reason is because management thought it would make them gain more profit in future by owning this asset now. But however, time is not on their side as commercial real estate price constantly increasing each second. Lehman Brothers would survive if they improve and use their risk management properly. One of the strategies to avoid the collapse to happen again is management need to pay more attention to create strategic risk in order to know the risk that can impact the company and it's resulting in good or bad effect. The strategy is one of the organization's business objectives. Companies exposed to substantial strategic risk can mitigate the potential of negative consequences by creating and maintaining infrastructure that support high-risk projects. Besides that, Lehman Brothers should practice strategies to minimize the risk in the stock market. It's not a good decision for a firm to buy all at once and keep it for a long time in order to sell it at a certain time, because we will never know the price of market in future, either it's going up or going down. The strategies to mitigate the risk in stock market is by follow the trend of the market, having portfolio diversification, and using stop loss or trailing tools. Management that is not carried out rationally by Lehman Brothers firm had badly impacted their financial and future. Lehman Brothers was left behind with toxic and unused assets. In 2006, interest rates started to rise. This made investors to distance from securities that is not giving them any benefits. Demand for commercial real estate also collapsed, and Lehman Brothers forced to write down on their commercial real estate assets. Lehman Brothers lost about $2.5 billion in first quarter of 2008 and another loss of $3.9 billion in September 2008. External strategies such as the collapse of Bear Stearns in first quarter of 2008 also heavily affect investor and lenders' confidence in Lehman Brothers firm. Impact from that, Lehman Brothers stock decreased 73% in the first half of 2008.
In 2007, Lehman Brothers was actively engaged in a highly disruptive and leveraged investment model. However, several companies use the same concept at the same time. The distinction is that some companies have the foresight to understand that United States housing market was facing an ongoing crash. CEO of Lehman Brothers did not take the time to analyze the company. When other companies began to reduce their debt, Lehman Brothers managed to expand their portfolio of mortgage-backed security assets, which are very risky. The strategy is not working as expected. Instead of being honest, the CEO told clients the company was financially stable and was not facing any issue. He made it difficult for investors to know the real condition of the company until it was too late. Lehman's financial stability was skewed and its balance sheet did not reveal any signs of distress. Strategic preparations are necessary for the business to regulate in the right way. The advice would be there to start any business megacities by acquiring some of the company so that they will work at a lower cost with fewer staff. The Lehman Brothers Group will also recover on the market with its rivals by offering reasonable interest rate loan. Effective market managers can also expand the gap to a higher degree and can also work outside the country by obtaining a well-known brand name. Investors lost their trust in the money market fund as they reported losses in Lehman's commercial paper. Company may not have been able to get their funds for their day-to-day activities. The economy will have crashed in just a few weeks. For example, shippers may not have the cash to supply food to grocery stores. The effect of the recession on millennials are striking relative to previous generations at the same period.